How you doing, everybody? My name is Kurt Henry, and I work together with my dad, Randy, and we are a part of a mortgage brokerage. So our job is basically to work with multiple banks and lenders to find our clients the best deal for when they're getting a mortgage, whether it's buying a house or whether they're refinancing by increasing their mortgage or whatever the case is. But this is a weekly mortgage update just to let you know what's going on in the mortgage market. And there has been a lot of changes in the last week, so I just wanted to make it clear what those changes are. So first of all, the changes in the past week from the Government of Canada do not affect the amount of down payment that you need to buy a house. So right now the minimum down payment is 5% down for when you're buying a house. However, there are circumstances where we can arrange for you to not have any down payment when you're buying a house. So that has not changed. If you're buying a house, you can do it with 5% down. In some cases, we can even do it with no down payment. So that hasn't changed at all. What has changed, and just to give you some background on how the Government of Canada can make these changes, is that when you have less than 20% down when you're buying a house, less than 20% down payment, that means in most cases the bank has to be insured. So that just means that the bank is saying if you were to default on the mortgage payments, basically what would happen is the bank would take the house and sell it, and from the sale they would take that money to pay off the bank's mortgage. But let's just say the value of the house goes down, then the bank is selling the house for less than what the mortgage is at, and then in that case the bank is losing money. So then the bank would go to the insurance company for the shortfall. So the reason why that's important is because there's basically two major insurance companies that insure banks. One is CMHC and the other is Genworth. Now CMHC is a part of the Government of Canada. So when the Government of Canada wants to make a change in the mortgage market, they actually make a change to CMHC's lending or approved lending guidelines. So CMHC will tell banks and lenders what the rules are with regards to when somebody is buying a house with less than 20% down. Because of course, like I said, if you have less than 20% down, the bank has to be insured by CMHC or Genworth, and that means that CMHC or Genworth have to also approve your mortgage when you're buying a house. So when the Government of Canada makes these changes, they're telling CMHC what those changes are, and therefore the banks and lenders have to go along with it for people that have less than 20% down. So what those changes are is that CMHC will now only approve mortgages with an amortization up to 30 years instead of 35 years. Now the amortization is the amount of time that it takes to pay the whole mortgage off to zero. And it used to be that the maximum was 35 years, but now that maximum is 30 years. So of course, the only reason to have a longer amortization is because that makes your monthly payment lower. So having said that, if you do have the mortgage for 35 years, there's no question that you will pay more interest over 35 years as opposed to doing it over, say, 25 years. But now, if you have less than 20% down, therefore CMHC has to approve the mortgage. The maximum amortization is now 30 years, not 35 years. Now, the other change is that you can, for existing mortgages, you can now only increase your mortgage up to 85% of the value of your house. So a lot of times what people will do is they'll increase their mortgage sometimes to get more money in order to pay off some debts, or for whatever other reason they want to get money. So when you're increasing your mortgage, it used to be that you could only increase the mortgage up to 90% of the value of the house. And now that has changed so that you can only increase your mortgage up to 85% of the value of the house. But that does not, like I said before, that does not affect when you're buying a house. Because when you're buying a house, you can buy with 5% down or even with no down payment in some cases. Now, in terms of both of these changes, so with regards to the amortization and also with regards to the amount that you can increase your mortgage to, the changes take place on March 18th of this year, of 2011. So what that means, though, is that if you get an approval, so in other words, if you were to buy a house today and you got the approval from the bank and from CMHC saying that you're doing a 35-year amortization. So just keep in mind that you're buying the house today, but maybe it doesn't close. So the closing date is when you take possession of the house. Let's say it doesn't close until April 1st, which is after the March 18th deadline. Then that's not a problem. Because CMHC has already approved it, you can still keep your mortgage at 35-year amortization. So if it closes after March 18th, it's not a problem. It's just that it has to be approved before March 18th. So that means that if you want to get the lowest mortgage payment possible, then what you want to do is buy the house and get the mortgage approved before March 18th. It's okay if it doesn't close until after March 18th. You just want to make sure that it's approved before then. Also, if you have been pre-approved, or if you are looking at buying a house, if you know that the numbers are really tight in how much you qualify for, this will affect you, because when we're talking about a 35-year amortization before, that was based on a smaller mortgage payment. So in other words, if you have to do a lesser amortization, that means the smallest mortgage payment is now a little bit higher. So therefore, you'll qualify for less if you're looking at buying a house. So if the numbers were tight and you've already looked at buying a house, you just want to keep in mind that March 18th deadline, because you might want to buy the house before March 18th because of these new rules. If you have any questions at all, the best way to get answers is to ask the people that have sent you this, or the person that has sent you this video. And if you have any other questions, feel free to give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.